Hey folks, Dan Frio here with your market update for March 28th, 2024. There's really nothing going on, folks. So I'm going to get to that in a second. When's the last time you see mortgage rates do absolutely nothing? Look at the top row over there, 0, 0, 0. So I'm not even going to go over rates today with you guys. You can see where the rates are. These people, these rates are for people that they have a 780 credit score. They're putting down 25%. It's a single family home. It's their first home and so forth. So if you have fantastic credit, you're putting down a bunch of money on a house, that's the best rates you're going to get. They're right over there. So what we're going to focus in on today is the data coming in this week, or the lack of data, why nothing's going on, but things are going to change tomorrow because the number one inflation number that the Federal Reserve monitors is coming out tomorrow, and that's what we're going to look at here in 1 second. So without further ado, let's get to it. The economic calendar we go on a daily basis is I usually show you this. This looks kind of dismal, doesn't it? So let me show you my screen. Here's my screen. I want to show you guys what's going on right now. So today, the economic calendar for today it's kind of packed, but there's really nothing here that's having the markets go in one direction or another. And guys, you can see this is live. So you're going to see all these are bonds trading live that you're going to see as the changes, as each trade goes by, you're going to see changes through here. So, pretty exciting, huh? But over here, this is the data that we have today. We have jobless claims, continued claims, corporate profits, PCE, and everything else. If we go through there, I can go one by one, but it's kind of, there's nothing there. Look at the jobless claims. Previous reading was 210. It came in at 210. Continued claims was 1.8 million previously. It's 1.8 million. You can see now the one thing here that kind of is we're really focusing in on for tomorrow is the PCE. So we have the core PCE right up through there that just came out, and that extract or pulls out the inflation and other pieces of this of the PCE. You can see the number was previously at 2. They expected it to jump a little bit to 2.1. It came in at 2 on the button. That's good news, but not enough to move the markets. What's actually going on in the markets? Well, everybody's anticipating tomorrow's agenda. What is tomorrow's agenda? It's right here. The core PCE inflation year over year. So this is the number that we're watching. Okay, this is the number that the Federal Reserve wants to continue to get down into the low 2s. Okay, they want this to basically get at 2. So that's what we're looking at. It's going to continually drop down through. If you look at this over time, you can see right through here. The last readings, it went from 3.7 to 3.5 to 3.2 to 2.9 to 2.8. So it's going in the right direction. So tomorrow's going to give us maybe enough signals that the Federal Reserve can come out now and actually pivot and start to reduce rates. If we look at what's going on in the bond market, we focus in on my channel right through here. This is a mortgage bond. This bond trades on Wall Street, and the yield on this bond, or I'll say the yield on this bond, is the biggest piece of your mortgage rate. Okay, so that's why we focus in on this. The 10-year Treasury has nothing to do with this. Corporate bonds don't have anything to do with this. The Federal Reserve doesn't even have anything to do with mortgage rates. It's this bond right here. And all you need to know is this. There's the price of the bond. Okay, and this is the adjustment for today. Think of a stock. That's the stock price, and that's the change for today. Here's how bonds work. What you're seeing on the screen, as the price goes down, you see a minus 5.05. That means rates are going up. So if the price of a bond goes down, the yield goes up. We love when it goes up because the yields are coming down. If we go to a 2-day chart, you're going to see it just fell off a cliff yesterday. It was not good news. Actually, we gave back all of our gains yesterday. So if you see a 5-day chart, here's where we started the week. And here's where we ended the week. So basically there's no changes. Okay, so that's not bad news, especially if you're out there looking to buy a house. At least you know that you're in this range, okay? But tomorrow, because of this inflation number, the number one inflationary figure that the Federal Reserve monitors, if that number comes in still with a good number, that might be enough to push the Federal Reserve into the rate reduction phase in June. So that's expectations from me and a lot of economists out there. So how's the markets, stock markets and everything reacting to this? When's the last time you saw the Dow Jones, down double digits, or the S&P, it's down 0.2, NASDAQ, minus 14. Nothing's going on over here. We see, everything is across the board is just stagnant. You have a holiday week, you have a spring break for people, you have people on vacations. It's kind of a dismal week when it comes to the inflationary data. So tomorrow's a big day when it comes to that. One thing I do want to talk to you guys about is your credit scores. I know this is kind of a bad little pivot, but lately we've had a lot of people kind of contentious or debating us about their credit scores. So folks, I want you to understand how credit scores work. You have probably 35, 40 of credit scores. So the credit scores that you pull most likely aren't going to match ours because we pull your mortgage score. That's what all mortgage companies and banks do when you're applying for a mortgage. So what is your mortgage score? Well, it's not your Credit Karma or Credit Sesame number. It's not your Discover number. It's actually right down through here, okay? So I actually created this website about 10 years ago for this purpose alone. You can go down through, it's called creditscoresandmore.com. You can go down through here. Here's a free credit scoring system. I use this system. Don't pay for any of the bells and whistles that they have. The free system's good enough. But if you really want to find out what your mortgage score, your true mortgage score is, you need to get your FICO mortgage score. How do you do that? You can get it right through here. This is your true credit score. You're going to click that. What it's going to do, it's going to open up, here's your FICO score. And it's going to give you different options on how you can get your FICO mortgage credit score. So check that out at the creditscoresandmore.com. But if you're out there and you're like, Dan, I really need some help with buying a house in 2024. I have great credit, great income, no money for a down payment. We might be able to help that. Yesterday, I was able to approve 3 people with our $10,000 grant program. So if you want to find out if there's some down payment assistance for you out there, go to our website, therateupdate.com, and hit the grant button. And it's going to find you grants up to $10,000 to see if you're eligible for those grants. Okay, so that's that part of it. If you're out there and you're like, Dan, I just need to apply just to see if I can get qualified for a loan. Well, hit the Apply Now button up there. It's going to launch you on your way. After you finish your application, me, Dave, or Alan will get in touch with you to go over any questions. But if you want to call us or you want to email me some questions, please do so. Here's our number. You scroll down to the bottom of the website, therateupdate.com. There's our number, 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. If you haven't yet subscribed, please do that down below. And if you're out there and you're trying to really monitor mortgage rates, please come back tomorrow because tomorrow is going to be a big day when it comes to mortgage rates and real estate. Take care, folks. See you tomorrow. Bye-bye.